Hello, my lovely people. Guess what day it is? That's right, it's Mortgage Tip Tuesday with your favorite loan officer. It's your girl, hashtag who? JLoan. Hey, happy Tuesday. It's October 19th. And of course, I'm going to bring to you what today is after I've done my research. So today is National Evaluate Your Life Day. I couldn't have thought of a better day. This day offers a time for you to reflect on your life, obviously with the aim of becoming better versions of yourself. Today is a day to check in with you, assess whether you're on the right track. And today is about self-evaluation and self-assessment. And what a better time of the year, fourth quarter of the year. We're getting ready to plan our goals for 2022. And so today is not a day of judgment. Today is a day of you setting aside some time with you to reflect, are you on the right path? If not, you can start over. I say this all the time. You can start over at any time and begin a brand new day, a brand new life starting today. So on National Evaluate Your Life Day, I hope that you have some time with you, and I hope that you're hitting all your goals this year. If not, let's get it together so we can do it for next year. Okay, so back to my mortgage tip, because that's why we're here. I wanted to talk about a subject that's very important, because the problem that we have these days is a lot of the times that borrowers get pre-approved and then they start making these changes and don't realize that it affects their pre-approval. And so I just wanted to do a brief little video on just because you're pre-approved, it says pre-approved, now what? Okay, so it's very important for you to realize that this is just the beginning. This is just the beginning. You're pre-approved, which gives you the right to go home shopping. But if, number two, if your profile changes, so does your pre-approval. You have to understand, when we issue a pre-approval letter, we are issuing it based on your current job, your current income, your current assets, and your current credit, and everything that's currently on that profile. If that changes, then your pre-approval does change and could possibly take you from pre-approved to not pre-approved. So I know it's on my number 5, which says communicate every possible change with your loan officer. That actually should have been number 3, is that you really have to communicate any changes that happen to your profile. Your loan officer should become your best friend. You must talk with them about everything that you're deciding to do, okay? Number 3 is we question every inquiry on your credit. So remember, your credit stays in your profile for 120 days. Which means you have pretty much 90 days to shop and 30 days to close your loan. Well, if you decide to pull your credit after we pre-approve you, that inquiry comes to us. Whether you know it or not, it's like we're stalking you. So that that inquiry comes to us, and now we have to question you as to why did you pull your credit? Did you open or incur new debt? So although you may not think we see it, we do see it, and this could cause a problem as whether or not you qualify, okay? And it's come an even bigger problem now because of the undisclosed notifications that we get, that sometimes a borrower does open a new debt, and when we asked them, they told us that they did not. That is mortgage fraud. You do not want to be in that situation, so be very open and very honest with your loan officer to say, hey, if I make these changes, is it going to hurt my loan? And most times we will say either no, but most times we're probably going to say, yes, it's going to hurt your profile. So don't do that, okay? And then number 4, we question every large deposit. Whether you pulled that cash from the safe or you work a part-time job or whatever it may be, if there are large non-direct deposit payroll going into your account, we are going to question that money and where it came from, okay? It doesn't matter that, oh, well, my mom gave me a gift or this. We need to track everything. And people ask, why? Why do you need to track it? Guess what? Because of money laundering. We have to track all money going into the account due to money laundering. So we need to know where it came from. We also want to make sure, well, did you take out a loan in order to get a loan? We need to know, is there another debt that you've incurred that we do not know about? That's why we question all of these deposits that go into your account. So don't do that. Don't do anything without speaking to your loan officer. The next one I already talked about, you must communicate. But number 6, this one has happened to me before. If you get married, we need to know, okay? If you were not married once you had your loan pre-approved and then you got married, it matters in most states, but it matters specifically in the state of Texas because we are a community property state. So there are loans that even if you're married and you don't want your spouse on the loan, or maybe they don't want to be on the loan, we still must pull their credit. Whether they like it or you like it, if you're married in the state of Texas, it changes the fact that now we must pull their credit. And there are loans that once we pull their credit, we have to count all non-joint debts against you. So if you decide to get married, and let's just say your wife or your husband has a ton of debt, well, now we have to count that against your pre-approval, and now that may take you from pre-approved to not approved at all. So again, these are life changes that you may think does not matter, but in the lending world, everything matters. So if you get married, you must let us know, okay? Number 7, if you get laid off or furloughed, we must know. Now, I did have this happen to a borrower, and it was the day that they closed. And because they had closed, they thought that they didn't need to let us know. Well, we do verify employment all the way up until your loan funds. Some lenders will do that the day before. Some lenders will do it the day you fund. Some lenders, especially in a refinance where you have a 3-day right of rescission, you don't know when they're verifying employment. So it's very important. If that happens, it's unfortunate. We don't want that to happen. We want to help you save or close on your home. But you have to let us know so that we can give you the best advice as to whether or not we're going to be able to help you. Okay, so that is important to let your loan officer know. Okay, now if you change jobs or positions, we must know. Now some people may think that doesn't matter. Well, I left one and I got to the other. It matters because lenders collect a full 2-year history of your employment. So if you change jobs, we need to know when you ended and when you started the next job, because in the lending world, there is a such thing as the job gap. And if you have a large job gap, guess what we need? We need to know, why do you have a large job gap? So everything in the mortgage process needs to be documented. So it's just better for you to just say, hey, either I'm thinking about getting a new job, or my company closed down and I found a new job and I start in 20 days. Is this going to be a problem? It's very important. Again, you must talk to your loan officer, okay? And then 9, if you start your own business, we must know. Now, this is important because you go from W-2 pay to now you're self-employed. Now, this doesn't mean that, hey, now I still have my W-2 job and now I'm starting to work for Uber. I'm saying you quit your job and you went self-employed. You had already got a pre-approval letter and you say, well, I'm making more than I was making. Well, that's important because once you go self-employed, lenders require that you have filed 2 years of tax returns. And so if you do that, now you've changed your pre-approval to now you're not approved. So I just give you a little bit of tidbit on here on what not to do after you get pre-approved. But the biggest thing that I'm telling you is that you have to communicate. We live in a world where texting and all of this stuff, there's not enough communication. You must communicate. You must talk to your loan officer. Again, I say this all the time. If you don't have the right loan officer, you don't feel comfortable and confident, you don't feel like you can trust them, then you need to get another loan officer, because we typically deal with you for 30 to 120 days during your process. And then a great loan officer, you deal with them forever, like me. So if you're looking to buy, if you're looking to refinance, if you're looking to build new, please consider me. I'd love to help you. I hope that this video is helpful. If it is, please comment, like, and share. As always, I want you to be blessed, be safe, and have a great rest of your week. Talk to you soon. Bye-bye.